Aloha, everybody. This is Joshua Hayes at BigWaveTrading.com and BigWaveTrading.net from Maui, Hawaii, coming to you with the weekend stock market wrap-up. First off, I got to say, Happy Memorial Day and Happy Memorial Day weekend, troops. I love you guys. You guys are number one for me. And don't forget, if you are listening to this, I give discounts to members in the military. And in fact, I'm slashing it even more for members in the military because I respect you guys too much. I hear too many horror stories about how you guys can't, make it out there. So I'm going to be giving 75% off to military members once my top guys can approve it and everything, because I believe those that are actively serving in the military deserve it. I would give it to you guys for free, but I can't. I can't risk that. I can't risk my stocks going out to the world. Jesse Livermore would have never have had that, and I will not have that. So let's go on and go on to the indexes. First off, Friday, light trading, as you can see on the NASDAQ. You can see the volume was much lower than the day before. And in fact, if we look at the index's trading range, you can see that once again we found some beautiful intraday support. Let me see if I have FinViz up here in my... There it is. So you can see that we got intraday support off the lows in the NASDAQ and the SP 500 and Dow. The NASDAQ, though, outperformed on an intraday basis the SP 500 and Dow, so you can see that it'll have a better close than the Dow or SP 500 was. But you can see the late day sell-off made it look very ugly. So for the first time, this, which would appear bullish because of the bullish intraday tail, is actually a mixed signal because the tail came early and the late day sell-off did hit the NASDAQ to prevent it from closing at the highs. Still, lower volume, and I tell you what, anytime you sell off on lower volume, or if you sell off even higher volume than the day before but it's below average, that's a good thing. So since the market's seen the highs, the NASDAQ has pulled back 4%, nothing major yet. Let's see if I can get it higher than 4%. Nope. Nothing more than 4%, and volume has been lower during the pullback. This is exactly what I wanted to see as the indexes came down to test their 50-day moving average. Let's look at the New York Stock Exchange. As you can see, it's starting to coil like it's a Bollinger Band almost, the 50 and 200-day moving average here. You can see that it's Bollinger Bands, they squeeze for volatility squeezes right before they break out and break down, and then the Bollinger Band expands. I don't use Bollinger Bands because, to be honest with you, they're useless to me. But you know what? Some people do, and a lot of professionals do. And to be honest with you, these guys will never, ever hold a Taser, Epic, LMLP, MRVC, Commerce One, MasterCard, IHS in 2005, FSLR. These guys will never hold stocks that go up more than 300% because these Bollinger Bands and all these RSIs and MACDs, they're too short term. The New York Stock Exchange, more good news. The bad day came on lower volume. Now you're like, Josh, but it was up 0.16%. Didn't I just show you the intraday chart? I just showed it to you, and I showed you that there was a nasty late day sell-off. So this index was going to close near the high of the day or at the high of the day, but it sold off at the end to have that kind of intraday reversal. And in fact, it was only up 9 points, from the close the day before. So it wasn't that great. Pretty much went nowhere. But once again, the lower volume's good. I just don't like to see the NYSE relative strength line lead, and that'll go with the Dow Jones Industrial Average. As you can see, there we go, down 0.18%, lower volume. Once again, look at the intraday action on that candlestick, and you can see it was not good. The only one it was good on was the NASDAQ, but the NASDAQ, like I said, still had a late day sell-off. Still, overall, it was A-OK. The S&P 600 down 0.89%, a little worrisome because it was only 10 cents off the low. However, it wasn't that bad, and actually, let me show you on the IBD indexes. I just have my scan running, so I'm sorry that it's taking that long to pull up. Let's bring up markets here and bring up the S&P 600. If it doesn't do it soon, I'm just going to go and move on. Okay, so it did do that. S&P small cap 600. Let's pull up the daily and look at volume. It was lower than the day before, so it's good. See, TC doesn't have the volume, so I needed to do that. So the day before volume, it's lower than the day before. Very good on the 0.89% sell-off. And the mid cap 400, same thing. Lower volume on the sell-off. The SOX, don't care about the volume there, but I do want to see how it acted. The semiconductor index, very good. Had actually a 0.02% gain. Little update overall. Let me show you how the IBD indexes worked. Markets, IBD 100, daily chart. Look at it. It was barely down at all. Look at the relative strength line. Ticked up a little bit. Lower volume on the pullback. That's good to see. See the IBD 100 once again IBD 185.85 is outperforming the market on certain days, down days. If it's an up day, the index is lag. But if it's a down day, they're holding up better. So that tells me that most of our top leading stocks will probably lead if this rally continues. But they need to consolidate. And the proof of that is just to look at this area from October to January, basically flat going nowhere. Then after a small little downtrend, it's got a small little uptick. Basically, it's been flat since October. So this is all a big base building area for me as far as I'm concerned. You can ignore all this crap stochastics up there. I can use it, but I can know how to use it in a different way that I don't have enough time to teach here. Relative strength line ticks up slightly with the update. They're comparing all the days of the S&P 500. S&P 500 was up, actually down 0.15%. So that's why the IBD 100 down less than 0.1% outperformed, and that's why the IBD 85.85 outperformed. So overall, the down day on Friday looked bad intraday, and the way I even heard some traders talking, they sure did make it feel bad. But let me go to the IBD, my IBD paper for this weekend, and I want to go, let's see, to the general market industry group. Now let me go pull up the put call ratio to see what that looks like here. Put call fell to 0.82. Oh, that's never good to see. So the put call was at 0.96 before today, and even on today's slightly down day, the traders in the pits of the puts and calls got more bullish, so that's a little disturbing to see. Still, 0.82 is around 1.0, which is, I would consider that high. The contrary indicator, they got it at 12-month high, 1.31. So there's the old high right up there, and that's what I would consider, for it to be pretty. If it gets up to here, then I know we're going to rally. But right here, it's still a mixed market, and that's why you have the 50 and 200 squeezing in on the 500. The indexes can hold support at 50, get above the 200. Eventually, the 50 will be above the 200, and that will be nothing but bullish. NYSE looks the same way. Dow Jones Industrial Average looks the same way. Come on, buddy. Pull up. There you go. And the NASDAQ looks the same way. The 50 and 200-day moving average is squeezing together, with the NASDAQ being the most bullish. And the indexes are only going to make more money once the 50 gets above the 200, and the indexes can learn to hold on. Now, if the 50 gets above the 200, prices dance around it, we roll back over, and we have another death cross. Crap. We're going to have another leg down. But if not, we got some nice charts out there. Let me see what that pretty one off the bottom is doing. It lost its max green bop, so always something to worry about. Look at that. Had max green bop this entire way. Even on the previous down days it held up, but nope, couldn't do it there. So that's something to worry about. However, the good news is that I do have a new long for us on Monday, and it's not a gold stock long. But the funny thing is that on the 19th, I had 2 new longs. Both were gold stocks. And on the 20th, I had 3 new longs. All 3 were gold stocks. And then, of course, on the 21st and the 22nd, the market finishes down. So I assumed that the 5 longs that I took would be down, right? Nope, because gold is moving higher. And let me pull up gold XGLD. Look at that index. Look at how it's rounding out. You have got yourself a very nice shaped cut base. And also, as I drew here, which I normally don't care about because I don't use them, you have a reverse head and shoulder bottom. So this is a reverse head and shoulder. You can see it on the weekly also. Shoulder, head, shoulder. And you have a very round cut base with the 50-day moving average above the 200 with the price above the 50. Confirming these indexes, platinum is also above the 50 and 200, though that's one weird acting stock. So I'd be careful about ever going long that one right now. And then silver, which also has a 200-day still in a downtrend, but if silver can get stronger, that 200-day will turn up and match gold. And, of course, confirming gold strength is the opposite, a head and shoulders top on the United States dollar. The first trend line that I drew after this shoulder, after this head and after this shoulder, I drew a trend line connecting these lows. If you would have taken this short with the breakdown, you now have a 5% gain on whatever kind of margin you have on your futures account. Now here is the second neckline, the important one, below 77. If it breaks below the 200 and then this neckline, the dollar, I believe, will go bye-bye, and I believe that China is buying gold along with just bullish market overall for gold. I believe that this reverse head and shoulders will work. It will be bullish, and I believe it is breaking out of a cut pattern here. And to confirm that, 5 new gold longs, all of them working. Can't argue with that. Okay, I'm going to go and wrap it up here. I'll be back with part 2, part 3, and maybe a part 4 for subscribers. Aloha.